the former American crown jewel of chipmaking, which has been crushed by competition and AI, shocked the world just 3 years prior, when it suddenly waded into the rough waters of Bitcoin mining, not with vague promises, but with silicon. Its new ASIC line Blockscale was tailored for one purpose: to dominate Bitcoin's proof-of-work battlefield. The second generation Blockscale wasn't a half measure. It could crunch 580 gigahashes per second, squeezing every calculation at a thrifty 26 joules per terahash. In plain English, it was shoulder to shoulder with the world's best Chinese machines, the Antminers and Watts miners, that had long ruled the industry. For the first time, an American alternative looked real. Big names quickly jumped on board: Argo blockchain, Jack Dorsey's blog, Hive, GRIID. GRIID even locked down a quarter of Intel's production at fixed prices, something Chinese suppliers never offered. To the US crypto world, it felt like a turning point. America finally had a weapon: break the stranglehold of Chinese mining rigs, which had over 90% of the global market. But just as hope surged, everything collapsed. In April 2023, Intel killed Blockscale. The announcement landed like a gut punch. The official line: the company needed to focus on IDM 2.0, its broader chip strategy. Behind the words was a simple fact: crypto was in a downturn. The Biden administration was tightening budgets, and mining looked expendable. Intel promised to monitor market opportunities, but the message was very clear: the project was over. For the American Bitcoin crowd, it felt like watching their own champion walk off in the middle of the game. However, then came 2025. Out of nowhere, the US government itself became Intel's savior in need. President Donald Trump, who is back in power, announced that Washington now owned about 10% of Intel, nearly 433 million shares worth $8.9 billion. Additionally, the government has pledged up to $8.5 billion in direct funding and potential federal loans of $11 billion. Trump, ever the showman that he is, announced: the United States of America now fully owns and controls 10% of Intel. The United States paid nothing for these shares. Suddenly, the company that once built America's only competitive Bitcoin miner was bound tighter than ever to the United States government. On the one side, of course, it's an attempt to rival competitiveness of the former CPU champion, but Bitcoin enthusiasts also began to wonder: was Blockscale really dead, or was it just waiting to be reborn under Washington's wing? Today, Chinese companies like Bitmain, MicroBT, and Canon control the Bitcoin mining hardware market, with an iron grip of 90 to 95% of all rigs worldwide. This dominance isn't just business, it's leverage. American miners, who run now 29% of Bitcoin's total network hash power, depend almost entirely on Chinese-made machines. And if Beijing tightened exports or geopolitics turn ugly, US mining could be kneecapped overnight. Intel was the only US firm that had cracked the code. Its Blockscale chips proved that American engineers could match Chinese efficiency. And now, with Washington sitting on 10% of Intel stocks, and Trump loudly declaring Bitcoin a strategic reserve asset, the pieces are starting to fit together. Trump's stance isn't subtle. In March this year, he created the US Strategic Bitcoin Reserve, seeded with around 200,000 Bitcoin seized from criminals, roughly 17 to 18 billion in worth. But more importantly, his executive order authorized Treasury and commercial to find budget-neutral ways to grow it. Mining Bitcoin instead of purchasing it is the ultimate taxpayer-neutral strategy. It turns electricity into money. It sidesteps exchanges, avoids budget battles, and generates fresh coins. Crucially, these mined bitcoins wouldn't automatically fall into the strategic reserve category. They could also be directed into the reserve if desired, but they could also be sold strategically on the open market to cover costs, fund operations, or even generate additional revenue for the government. What initially looked like a failed experiment just 2 years prior in hindsight could be the dress rehearsal for a much bigger act. Intel and the US government teaming up to mine Bitcoin at a scale, not just to hold it, but to harness it as a reserve and a potential revenue stream to fight together against dependencies in the world of modern technology. But this raises the question, how could this work? How could they work together? Well, here is how everything could play out in the real world. First, of course, Intel would quietly restart Blockscale, but not as a crypto venture. Instead, it would be reborn as a national security project, with Washington as a shareholder and patron. Intel would have both motive and mandate to build the next generation of ASICs, chips sharper and more efficient than ever, and more efficient than China's Antminer 21s. Second, the machines would find their home not in a flashy federal Bitcoin mine, but in a scattered web of facilities across the whole country. Picture them humming beside hydro dams in the Pacific Northwest, wind farms in Texas, nuclear plants in Illinois, and oil fields in North Dakota, where natural gas is flared into the sky. The US wastes around 240 billion cubic feet of gas every year, and redirecting even a fraction of that into mining could help produce massive amounts of the digital gold. Third, the funding puzzle. No taxes needed. Intel's chip R&D would already be subsidized. Facilities could be financed through the partial of energy infrastructure programs or even seized criminal funds. Once the rigs start mining, the Bitcoin itself pays the bills. Some of those Bitcoins could be directed also, of course, in the strategic reserve. Others, however, could be sold on the open market, which would give the US a steady stream of liquid capital that could finance operation, generate extra revenue for Treasury, or even support other federal initiatives of 164,250 Bitcoin per year globally. If the US just grabbed 5% of the hash rate, they produce around 8,200 Bitcoin annually. At 100,000 per coin, it's nearly 820 million in revenue per year alone. Over a decade, that's 80,000 Bitcoin, potentially doubling US holdings. If Bitcoin climbs to 200,000, those mined coins would be worth 16 billion. Whether those coins are stockpiled in the US or sold, the US would gain a flexible stream of revenue without raising any taxes. Finally, the government could also involve private miners. Incentivized, such as tax credits or energy subsidies, could be tied to the use of Intel-made rigs. With that being said, let me know what you think. Do you think this is actually a realistic scenario and that the United States has a chance to overcome the dependencies from China, not just in the Bitcoin market, but also outside? Let me know what you think. I recently published also other videos about an IPO of Gemini that I think could be very interesting to watch. That's it for today. I will see you in the next video.